Hi, I'm James Robinson, and this is my stock pick of the week. This week's stock pick is RYAAY, symbol RYAAY. So I actually bought RYAAY back on February 16th. I haven't got around to making a video until now. The price that I paid for RYAAY February 16th was $108 a share, and currently it's trading at $114.12 a share. So the first thing that I want to talk about is that whenever I buy or sell a stock, I will post on Twitter when I bought a stock and what price I paid for it. I do that so there's a record of when I do it. I also do that because it sometimes takes me several weeks to get to a video, especially if I buy multiple stocks at the same time. And I bought Nu Skin, RYAAY, and RYAAY all within a week of each other. And obviously it takes me some time to write and edit these videos. So if you want real-time information when I buy a stock, follow me on Twitter. My handle is @robinsonstocks.com. I also let you know when I sell a stock there, and I will never do a video on that, or almost never. Additionally, I post things on Twitter that I think are relevant to value investing, whether that's YouTube videos or articles that I read, and as well as posting information on new videos. So that's the first thing. The second thing is I want to thank all my subscribers. You can see by this chart that the channel continues to grow. Obviously, it's a small little channel and it's a niche product, but I'm really excited about it. And finally, you see a map here of where my known subscribers are. I think it's really cool that I have followers all over the world, so as well as all over America. So wherever you're following from, drop a note in the comments and let me know. I'd appreciate it. The impetus for doing this channel was that I felt if I was doing these sorts of videos and I was putting them out into the world, that it would really be it would force me to really make sure I had done my research. And my results since I started doing these videos have improved. And I'm not sure if that's because the market's generally done well, or if it's because I am really just being more strict in what I'm looking at and really wanting to make sure when I buy a stock, it makes sense. But what I've evolved over the last 2 or 3 years doing these videos is I do a 5-part series on every company that I buy. The first one is an overview where I look at what the company does. I look at my analysis of the overall company's fundamentals, and just try and get a sense of what's going on with the company. Then I look at the company's operations, which is how efficiently the company delivers goods and services to the customers, and I'll do a video on that. I look at the company's balance sheet, which is how much debt they have, how much cash they have, really risk factors that might impact the business. I also think that what's happening with the balance sheet is an indication of how well run the company is, because if you're having to constantly borrow money to stay in business, you're probably doing something wrong. If you have tons of cash that you've got there, then you're probably and no debt, then you're probably doing some things right. Next, I look at the company's dividends. A lot of people are dividend investors. I'm not a dividend investor. I'm looking for good companies and don't care about the dividends. Having said that, if I've got to wait a year or two for the company to come around to where I think the value is, then getting dividends while I wait's a nice little play. And I do also have a portion of my investment funds in dividend plays, which aren't really delineated here, but it is something that I do look at for part of my portfolio. The final thing that I look at for a company is wealth creation. And wealth creation simply is how good a job is the management doing in creating wealth for the shareholders, which after all is the primary function of management. The only reason businesses exist is to generate profits and wealth for the people who own the business. So those are the 5 parts that I do. And this is the first part, which is the overview of the company. So RYAAY is an airline, and the thing to think about is that it's sort of, for those of us in America, it's the Southwest Airlines of Europe, is kind of the oversimplified version of what they do. It provides scheduled passenger airline service in Ireland, the United Kingdom, Italy, Spain, Germany, and other European countries. It has a number of subsidiary airlines that also do travel. For example, Malta Air, I think, is one of their subsidiaries. It also does ancillary services, non-flight scheduled services, so charter planes, internet-related services. I'm assuming that that's really sort of the sale of internet service to their people that are flying. In-flight beverages, food, merchandise, and they also do hotel and car hire services, as well as travel insurance. It has a fleet of 440 Boeing 737, so it's very, very big. 26 of them are Airbus, it flies 737s and Airbus A320s. So it's sort of, again, very much like Southwest Airlines. It offers approximately 2,500 scheduled short-haul flights per day. They service 242 airports. They have 79 bases. Again, an airport's a place that you fly into and then you might fly back out of. A base is where you've got operations that are in addition to simply landing airplanes. It was founded in 1985 and it's headquartered in Swords, Ireland. The company employs 16,000 people. Now, all of that was pre-pandemic, right? The company did $9 billion in revenue in 2019 and did $3 billion of revenue in 2020. And we all understand what's happened to the airline business as a result of the pandemic. But I believe it was a very solid company. I believe it was the low-cost provider airline in Europe, which there's a market for that. And because I think it's like Southwest, I believe that it's going to continue to fill that role. It's got sort of a place in mind of the customer. It's got a consumer monopoly for people who simply want no frills, very cheap travel. The company's debt has been very, very flat since 2011. And during that time, it's grown revenues by 40% and it's doubled its profits. So one of the things that really I like about this company is airlines are very, very capital intensive businesses. They're always constantly buying new planes and new engines and new equipment. And if a company is able to tamp down the debt and tamp down the capital expenses and continue to grow its profits, that's a company that's extremely well run. Now, how fast will this company rebound? That's anybody's guess. But I believe that this is a company that will be supported by its local government and that it will come out of the other side of this thing. And whether that takes a year or two, I don't care. I think this will be a nice little bump. And I don't mind owning this company for a very long term because I don't think airline travel is going anywhere. I don't think low-cost airline travel is going anywhere. And I like low-cost providers in businesses that are basically commodities. So it's this is an interesting mix of companies. On the one hand, it's obviously a commodity business in that people who are flying, especially people who are flying Ryan Airlines, simply want the cheapest flight. And if someone else offers a cheaper flight, then they're going to go fly them instead of Ryan. But I believe that Ryan is the low-cost provider. And as the low-cost provider, they have a bit of a monopoly because they're able to keep their prices lower than their competitors. So it's kind of a duality there. And which one will win, whether it's a commodity or whether it's a low-cost provider, is sort of anyone's guess. I happen to be on the side that the business will do very, very well in the long term. So as of March 18th, the company had a market cap of $22.64 billion. The company's revenues were $3.188 billion in 2021, but that's down from $9 billion due to the pandemic. The profits were $716 million. That may not subsist. I mean, we might see that the next set of numbers that are reported will be much lower than that. I think this is a very short-term thing, and I think the company will come back. Based on that $716 million, you're buying the company at a PE ratio of about 18. The company doesn't pay a dividend. Its total debt is about $4.18 billion. And one of the things that I've started talking about in all these videos is that whether the company I'm looking at is or is not a member of the S&P 500. Obviously, this is an Irish company, not an American company, and so it's not part of the S&P 500. And I'm trying to buy companies that are not part of the S&P 500 because I think that index fund is broadly overpriced. And so I'm trying to avoid those companies. So when I look at a company, I look at its relative strengths and weaknesses in 29 categories. 9 of those categories are operations, which is how good a job a company does in delivering goods and services to the customer. 10 are financial, and they look at the balance sheet and debt-related risk factors. And the final 10 are the job management is doing creating wealth for company owners. So each category is graded on a scale of 1 to 4. 4 is deemed excellent, 1 is unattractive. This company has an aggregate score of 92, which makes it, believe it or not, the 92nd highest rated of the 900 companies that I've looked at. So it's just outside the top 10% of companies that I've looked at. It has an average score of 3.0 or above in all 3 categories. So it's very, very good, both in operations and in finance and in wealth creation. And only about 5% of the companies that I've looked at are able to achieve that. So looking at this score, looking at this company, it does an exceptional job, especially when you consider that its gross margins are very, very low. And the earnings per share are relatively low. And again, I think that's part of the pandemic. But there's nothing about this company that's not great. The current ratio is a little small, but that's not a big problem for this company. We'll talk more about that later. Long story short, the fundamentals of this company are very, very solid. So that does it for an overview of Ryan. Over the next few days, I'll be doing these other videos. Hopefully you'll tune in for those. Thank you very much for watching. I appreciate your time.